The real estate market continues to soar to new heights, even in a global pandemic. But while house prices have gone through the roof, commercial real estate isn't doing so well. We'll hear from CEO of Kingston Properties, Kevin Richards, and CEO of Victoria Mutual Property Services, Michael Neita. And the analysts weigh in on the latest market developments. What does the iPhone 13 have to do with US inflation? And Productive Business Solutions has acquired its sister company, PBS Technology Group, increasing their footprint in Latin America and the Caribbean. We'll discuss this and more on Taking Stock Live, the Caribbean's #1 business show. With me, Kalilah Reynolds, 3-time Business Journalist of the Year. Hello, everybody. Good night, good evening, good buenas tardes, whatever part of the world you're in, and welcome to Taking Stock Live. I don't know, I just really like this live buzz. You like my set? We're here at KRM Studios, and we're doing our thing. You notice new sponsor alert. Big up to Appleton, because what's business without a little rum on the side, right? How many business deals have been made over a proper glass? All the time it happens. So welcome, like I said, to this edition of Taking Stock Live. Very pleased to have you. Make sure that you comment who's on, who's watching right now. I see people are starting to join the chat. Director Minute Motivation says, Happy Independence Day, Belize. Yes, how can I not say it? I'm from Belize. I've been living in Jamaica for a while now, but Belize born and raised. So happy Independence Day, 40th birthday and big up to all my Belizean family who are in tune all around the world as well. So should I sing the anthem? No, let me not go into all of that tonight. But yes, definitely looking forward to a trip back home soon. One is overdue. Curse you, COVID, for keeping me away for so long. Also want to remind you all to head over to my website if you're not already there and subscribe to my newsletter. We're really trying to build this email base because there's lots of great benefits to being a newsletter subscriber. You get our emails to your inbox twice a week. You get what's hot in business. You get your weekly recaps on Sundays. And I've started doing a Sunday editorial in my newsletter. It started out just as I guess some random thoughts from me and updates about the business and so on. But it's kind of been developing into an editorial, and I like having a space to write my thoughts on the current environment. So subscribe at KalilahReynolds.com/newsletter. You get that straight to your inbox. We got a lot to talk about today. You saw just now in the opening, we're talking about commercial real estate. Later on, we're going to be talking about the iPhone 13 and what that has to do with inflation. But first, here's what's hot in business.
Here's what's hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The Jamaican dollar fell below the 150 to 1 US dollar mark last week for the first time since July. On September 14, the dollar dropped to $149.49 and continued to fall for the rest of the trading week. It started trading on Monday at $149.10. Since trading at $149.87 on July 1, the dollar has consistently been in the $150 range, reaching a record low of $156.14 on July 27. Monday's opening rate represents an appreciation of the Jamaican dollar of around 4% since mid-August. At August 16, the dollar had depreciated around 9% for the calendar year to date. It's now down 4.5% since the start of the year. The decline of the Jamaican dollar over the last few months could be attributed to the impact of the ongoing pandemic as well as domestic economic challenges. Micro, small and medium-sized enterprises (MSMEs) affected by the pandemic can now benefit from $3 billion in loans and grants from the Development Bank of Jamaica (DBJ). The aid comes under the DBJ's Social and Economic Recovery and Vaccine Serve Jamaica program launched last week. The program has 3 initiatives. Under the Go Digital grant, MSMEs can access up to $300,000 to buy software and services to computerize or digitize businesses. They can also get up to an $800,000 loan fixed at 2% over 3 years under the MSME Go Digital Loan, or get a recovery loan of up to $10 million fixed at 5% over 8 years. You can apply for the grant at dbjvoucher.com, while the loans are available through participating microcredit institutions, credit unions, and banks. Ask your financial institution for a SERVE loan. However, the offers are only available until March, so act quickly if you're interested. Proven Wealth is reportedly weighing the possibility of adding cryptocurrency trading for clients to its suite of products. Proven's announcement follows that of its US-based clearinghouse Interactive Brokers that it will start allowing crypto trades. Interactive plans to start allowing trading in Bitcoin, Ethereum, Litecoin, and Bitcoin Cash on its platform. The company said it would partner with Paxos Trust Company, the blockchain firm which operates a large crypto platform. CEO of Proven Wealth, Johan Heaven, told the Financial Gleaner that the brokerage firm is still ironing out the details, but added that cryptocurrency is the way of the future. Light bills are going up next month. The Office of Utilities Regulation OUR has approved a rate increase for JPS. The adjusted rates took effect on September 1 and will be reflected on next month's bills. JPS had sought an average increase of 3.5%, but the regulator approved an overall average increase of 1.4%. Residential customers will pay 1.2% more for electricity. Small commercial customers will see a 1.1% increase. Bills for large commercial customers will go up between 1.4 and 1.6%. There's been a lot of public backlash over the increase, but JPS has defended it, saying that it's necessary to maintain quality service. Kingston Properties KP REIT is to acquire 3 units in an industrial development in the Cayman Islands called Gumtree 5. The units are slated for completion in October 2022. They're being acquired for $3.13 million. This is the second mixed-use industrial property acquisition by KP REIT in Cayman. It's also their 4th property purchase there over the last 5 years. KP REIT CEO Kevin Richards says the acquisition is a part of the company's strategic plan to diversify its holdings in different jurisdictions and its thrust to increase holdings in industrial properties. He added that it also comes against the rise in the demand for warehouse and mixed-use properties globally and especially in Cayman. In other real estate news, First Rock Capital Holdings has secured a 5-year lease for its newly acquired commercial building on Oxford Terrace in New Kingston. BPO company Anglin Global Affiliates signed the lease on September 15. Anglin Global is aiming to secure some 3,000 call center seats. The lease is renewable at the end of its term. 83% of the Jamaica Manufacturers and Exporters membership are projecting losses in revenue for the August period due to the lockdowns. The statistic was disclosed by the JMEA following a survey of its members. Based on the data, some 80% of members experienced a decline in productivity. 40% are also reporting that their suppliers were severely hindered during the no-movement days. 17% of those surveyed were unsure about how the no-movement days would affect their revenue. With the data suggesting that the measure was negatively impacting members, the JMEA had called for a reduction in the no-movement days. New measures announced by the government a day later proved favorable, with only Sundays now designated a no-movement day. There's also an additional hour before the start of the nightly curfew during the week.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilahReynolds.com/store to order your t-shirt and your mask today. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. And it's also brought to you by Appleton Estate. Big up Appleton. Yes, we're going to be talking a little bit about that later on in the show. I have a surprise for some of our guests. So let's get right into it. Oh, before that, so did you notice the first story in What's Hot just now about the Jamaican dollar? I just checked where it is and we're now down to 148. Still not great, but when we're coming from a high of 155 and change, I think it hit 156 at one point. definitely grateful that the dollar is regaining some value at least. So we're definitely keeping our eye on that. Can it get back down to the 125 range where we were pre-COVID? Wouldn't that be lovely? Well, that depends a lot on the reemergence of the tourism sector, a lot on much more manufacturing and exporting so that we can start earning some more US dollars. And that way the value of our local currency can appreciate. And how that spills over into so many other facets of life. But this evening, we are talking about real estate, primarily commercial real estate. So you may know that residential real estate, if you've been following the market, has been really doing well even throughout the pandemic. I won't even say despite the pandemic, but probably because of it, people have seen real estate as a safe haven for money. So while the stock market took a hit, money went into into residential real estate in quite a significant way. So we want to talk about and look at what has happened in the residential area right now. So joining me to talk about this are CEO of Kingston Properties, Kevin Richards, and we also have CEO of Victoria Mutual Property Services, Michael Neita. Welcome to the show, Kevin. Michael, how are you doing?
Thanks for having me, Kalilah.
Thanks for having me.
Glad to have you join us. I said that you were just on our What's Hot segment as well, Kevin. The KP REIT making some moves in Cayman.
We've been a little busy this year, pretty busy.
Apparently,
More to come.
acquisitions and more acquisitions. We like to see it. All right, well, let's start with you then, Kevin. Just give us a general overview of how the real estate industry or sector has been performing since 2020 in this pandemic time, COVID impact on real estate.
Yeah, I think it's been a mixed bag of performance in the sector, depending on which class of real estate you're in. I know our focus for this evening is to talk about commercial real estate, but some sectors of the commercial real estate space have done well, some have not done so well. For example, the industrial space, which would include warehousing and storage, that I think has been very resilient right through this pandemic, largely because there's been a growth in e-commerce. Lots of persons who are working from home, or whether they were furloughed or whatnot, and at home, people were ordering stuff online. So that drove the demand for goods, products that needed storage. So there was a lot of logistics movements and the need for storage and warehousing. So that sector, I think, did fairly well. And then we've seen it from our own performance. As it concerns other segments of the market, such as commercial real estate or even retail, those didn't fare so well. In many instances, you saw where commercial tenants were requesting, either a reduction in space, because half of the staff was working from home, or even in some cases, we've heard of, folks asking for a reduction in rents because, whether it's businesses down or they just don't need that much space. Retail, we know pretty much what has happened in that sector because of, restrictions in movements, whether it's, lockdowns or curfews or whatnot. That caused a reduction in the demand and obviously a reduction in how those spaces have been doing. I think we're seeing a little bit of a turn in some sectors because, lockdowns and restrictions have largely been lifted across the globe. It varies in different jurisdictions. And there is a return to activity because of, the ramping up of vaccination rates and, more governments are looking at opening up. That is causing a bit of a shift back for some of the, people in the retail and office space. But I still think that, like this pandemic and this virus, there's a lot of unknown and a lot of uncertainty going forward. But one thing we know that the area that has been really strong has been the industrial sector.
Industrial, interesting. So before we look at industrial versus commercial, Michael, tell me, do you think these changes are permanent or is just because of the pandemic, and then once the pandemic is eventually over, things will bounce back?
Well, industrial will continue and grow. For retail has really suffered because of the foot traffic, fall off in foot traffic. And the tenants have suffered, the owners have seen escalations in receivables As Kevin has indicated, people have been given breaks on rent. In the commercial space, major owners of commercial real estate, in order to safeguard their staff from the pandemic, have ramped up work from home, remote working facilities for their staff. So you find offices that, were, every seat filled are now anywhere between 50, 60, 20% occupied. This really hasn't pushed property owners to look at reducing space. Tenants are unsure, given there are no real good estimates on how long this pandemic will last. It seems as if it will go for another 12 to 18 months.
I
The
remember when we
recovery
thought
will
this
be
would be
different.
like, I remember when we thought this would be like 3 months.
Yeah,
But in March, we
yeah.
thought that it would be over by the summer.
Yeah, yeah, yeah.
And now
But
look at us, 18 plus months later, saying it's
yeah,
probably going to go another year and a half.
it will change. It will change the way people work. I think
It
permanently.
has
You
already,
might
or you
you
think
might not
permanently?
find that, you won't find that people will go totally back. Primarily because employers or owners might see this as an opportunity to leverage this new capability. Workers who were forced to come into office every day and to face a commute, some find it a better way of working, so it might be a preference for them going forward in their lives. So there'll be change, and it probably will kind of slow the growth in corporate commercial real estate for a while.
So, for the two of you who head companies that invest in various types of real estate, how does this affect the decision making for you?
Yeah, there's a lot of planning and forward thinking that has to take place now. In terms of office space, you look at what is really in demand, and I agree with Michael. I think there's going to be some sort of hybrid model that we will operate in going forward. I think one of the key things that people are looking at is how efficiently they use space, and also what their carbon footprint is in some of those spaces. So you're going to be seeing people who are looking for more sustainability in the buildings that they occupy. How much are they conserving on energy? Are they using renewables in those in those buildings? And pretty much certain things like the free flow of fresh air through a building is going to become more critical. So you have to think about how you're going to configure the space that you have now, or any space that you're looking at. How is that going to meet those needs for what the future portends? I did mention before that industrial is going to be a key factor going forward in terms of the selection of properties. And another subcategory that sort of fits in between office and industrial is what we call a mixed use space, where you'll see some people who look at a sort of open plan facility that you can use for storage of some of your facilities, but you could also have some office space there. So I think that's sort of the main thing that is going to be driving the demand for space going forward. So we're looking at how we can target those specific sectors and sort of maximize the kind of input we can make in those sectors, because that is where the demand is going to be strongest going forward.
Why do you expect a strong demand in industrial real estate?
Largely because people are going to be not, moving around as as much as possible as they used to do in the past. So you're going to be, ordering stuff online. So delivery and logistics service is going to be very important. So people are going to need places where they can actually store stuff. And you can look at even some of the listed companies now that are involved in logistics and how well they have
Look
done.
at a meal pack, yeah.
That's right. So there, companies like those, not singling out that particular one, companies like those will be always looking for more and more space, because the demand from persons who are buying and ordering goods from overseas, demand for space to store some of those things, and also just how they are going to distribute some of those products is going to be very, very important.
And Michael, do you see an opportunity here in terms of, so we've been talking about the decline in commercial real estate due to the pandemic, but are there any opportunities that you spot because of this? So that would mean that commercial real estate prices, I imagine, would have fallen. So for somebody who is looking for commercial space, because maybe you have a business in the areas that Kevin just described, is there an opportunity here?
I wouldn't really call it a decline. It's kind of like an interruption. I don't think investors will consider it, a declining investment asset. They'll wait it out, and it will recover.
No, well, I mean, in terms of rental prices, what are prices looking like for rent? Have those fallen?
No. So people are keeping their spaces. People are hedging their bets. The owners will probably give, a break in order to safeguard tenants, but certainly there won't be a fall in rates. But in
So
terms of the
even though
opportunity,
there's a fall in demand, the rental prices have held steady in the commercial real estate sector.
well, technically there isn't really a fall in demand. I think real estate commercial space is almost full across the country. The vacancy rates are not that high. It's just that the occupants choose how to work in that space. So they might not have as many staff members in there, but they continue to pay the rent or to continue to own the properties. So it will kind of slow the pace of growth in commercial real estate, but it won't. I don't think it will push a decline. But Kevin mentioned
But if
the
these, if
opportunities.
these, but if these changes are permanent or at least semi-permanent, as you suggested earlier, then wouldn't there eventually be a decline?
No, so the spaces will exist. People will demand the spaces. They might not put as many people in the spaces as before, but they won't give up space because there's a limited stock of commercial real estate in the country. So in terms of new construction, it might, cause investors to slow the investment in commercial real estate. But the pandemic will be behind us, and life will go back. Not maybe the way people work will change permanently, but there will be demand for space going forward. So there will be a slowing, but not a regression. But there are opportunities Kevin mentioned for other types of space. Certainly light commercial, distributive spaces, the use of courier services, online purchasing. So space will change. Retail probably will come back, but a bit more slowly. Tenants will hurt certainly in the next 18 months. So there might be fallout there. But distributive light industrial certainly will grow, and commercial will remain, especially for blue chip corporate customers.
Yeah, what I'd add as well, Kalilah, one of the things
Go ahead.
we experienced with some tenants, in fact, one major tenant who is making a debate whether, based on some of the the social and physical distancing requirements, means that they would probably have to take on more office space to accommodate their staff. Even though you may have some people working from home, they really need to maintain a certain level of distance. So it's actually a debate that some companies are looking at. Do we need to take on more space so that we can provide the level of physical distance required? Or, are we just going to keep the space that we have and have a hybrid model of some people working from home, some people in the office? So there has been some, and I agree with Michael, there has been some sort of steady consistency in terms of the office spaces. So certainly we've seen that in Jamaica, and as he said, vacancy rates are very low.
That's a good point, because you do need that space to maintain the social distancing, even though you don't have the same number of staff there. Mm-hmm. So both of you mentioned the issue of, actually, I think it was Michael who mentioned the issue of there being limited commercial real estate options to begin with. So what are you seeing in the developments? Are we seeing any more commercial real estate developments? I know Cygnus has a big one. They're on Belmont Road. I think there are a couple others as well. What are you seeing there? Has that been picking up?
real estate development is a multi-year process. So the pandemic might last 3 years. People will continue to plan, forecast for demand. There will be demand, so people will be in the process of planning. There is a shortage of good commercial real estate, certainly for owners and for investors. So I'm sure we will see plans and new construction starting in the next couple of years.
Do you guys have any data on this?
The most is that I've seen recently is just the number of applications that have been approved, but unfortunately, we don't get a breakout of that data. What is commercial development versus what is residential. But certainly that has been steadily growing. The only test you could do is just to drive around and look at some of the projects that are going up. If you see a project going up in New Kingston, for example, on the Knutsford Boulevard corridor or any of the roads off of that, then it's fair to assume that that's going to be a commercial development as opposed to a residential one. And there's some of those projects that have been going up. Prior to the pandemic, we saw a big rush for companies to move on the outskirts of, that same corridor I just spoke about, because of traffic congestion and that sort of thing. So there are a number of projects that had started and I think have been completed now during this period that, persons are looking at. And it's interesting to kind of watch and see what's going to happen with the take-up of some of those spaces.
So based on what you've both said, go ahead, Michael, before I ask you.
And part of your segment highlighted opening of a BPO. The BPO sector has been growing. I mean, you look around the corporate area, Montego Bay, Mandeville, there are a number of BPOs that have gone up in the last few years, and some are going up even now. Kevin mentioned earlier that the pandemic is forcing people to look at how densely they pack people into BPOs. We've seen the effects of that in the pandemic. So, we'll see a demand for more space to accommodate the same numbers of people in BPOs because of that consideration.
Yeah, good point. So BPO sector definitely seems to have I don't want to say benefited from the pandemic, but seen an increased demand for their services as a result of the pandemic. That's one sector that clearly continues to grow. So based on everything that you've both said and your observations of the sector, is commercial real estate still a viable option for investors right now?
Absolutely. If not, then we should all just lock up shop and go home. It absolutely. And as I said, there are various segments. So, people may be looking at what's happening in retail or with some office and thinking that it's dead, but absolutely not. As I said, there's a trend, for example, that we see developing in more modern societies, the sort of more developed metropolises, where people are looking at the alternative use of office space, for example. So you'll see some place that used to be an office building being, retrofitted for maybe a condo, or, what's been very popular is converting them into life sciences or medical facilities. So there are opportunities in terms of some of the existing buildings that are around, and as well for new build. So you'll have to look at, going forward, what are some of those businesses where people really can't work from home, and they're maybe it's a business that has a need for customer facing, so you're definitely going to need to have the physical brick and mortar to occupy. So I think that is perhaps one way of looking at any possible opportunities going forward.
Well, you've definitely given us quite a bit to consider, Kevin and Michael. Thank you so much for joining me on this segment.
Thanks for having me.
Thank you very much.
Before you go, I almost forgot. How could I forget? I have a gift for you both. I can't give it to you through this. No, I'm going to send it to you. All right. So it's a gift basket from Appleton. It is their 8-year reserve. So this is the good stuff. The Joy Spence Master Blender Single Estate Jamaica Rum. So we'll be sending this to you tomorrow. You both get your package. Watch Michael smile. Michael, you look happy.
Yeah.
Oh, thank you.
Yeah.
I think my team at the office will enjoy celebrating the profits we've done for this year. So, on
Yeah,
behalf of
cheers
them,
to
thank
that.
you.
Thank you
Cheers
very
to
much.
that. Cheers to that. All right. Thank you guys so much.
Thanks for having me. Keep safe.
Awesome. Well, up next, we have your market recap, and the analysts are standing by. The Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 108 stocks traded across both the main and the junior markets of the JSE for the week ending Friday, September 17, 2021. 41 advanced, 54 declined, and 13 stayed the same. 77 million shares changed hands on the Jamaican dollar market, totaling $1.5 billion. Lumber Depot traded the most, taking up nearly 15% of market volume. The stock lost 20 cents to open the week at $2.98. Wigton and Wind Farm ordinary shares traded at the second highest, with people buying and selling nearly 11 million shares in the company. The stock remained unchanged to open this new week at 51 cents. And the Trans-Jamaican Highway rounded out the most traded, taking up nearly 13% of market volume. The stock lost 1 cent to open this week at $1.21. Now let's see who had the biggest gains. ISP Finance Services stock price rose 35% to close last week at $23.50. Pulse Investments gained 72 cents to open this week at $4.57. And rounding out our biggest gains, Sterling Investments USD up nearly 16% to open this week at 2 cents US. On the losing side now, SSL Venture Capital Jamaica was the biggest loser for the week, down nearly 16%. The stock closed last week at 65 cents. Jamaica Broilers Group was second on the list. Its stock price fell 12% this week. The stock opens this new week at $28.90. Rounding off the biggest losers, Portland JSX, which lost 12% to close last week at $7.03. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
Your best interest at heart. So, welcome back to Taking Stock. It's time now for the analysts, and it is my pleasure to welcome our team of analysts this week. Oh, before I do that, I forgot to give you guys our poll question. So, we have our weekly poll on the channel. So, this week's question: the United States has announced that effective November, all visitors will need to be vaccinated. Did you hear that news earlier this week? So, here's my question. Will this affect your decision to take the vaccine? Yes, no, maybe so. Comment below and take our poll on the channel. I'm curious to know what your thoughts are on this. If you haven't, I guess that is if you haven't taken the vaccine yet. If you have, would it have? Would this have made a difference? And especially for those who are on the fence or don't really want to, would this affect your decision? If you can't get into the United States for vacation, to visit your family, whether you're in transit, like I need to travel to Belize soon, I have to fly through Miami, would this affect your decision to take the vaccine? Comment below and take our poll. So, time now for the analysts. Let me tell you who we have on. I see one new face, and that is Group Client Investment Manager at JMMB Group, Peter Thompson. Welcome to the show for the first time, Peter. Good to have you.
Hi, Kalilah. Apparently, I have one of those faces that you can forget, because I think David and myself have been on.
You have been on before.
Yes, I have one of those
but it's been a while. It's been a while because we usually have Leo or sometimes Clive. But yeah, Peter, you're on. It's been several months since we've seen you. David is back, business writer at The Observer, and of course, financial coach, founder, and CEO of Profit Jumpstarter, Keisha Bailey. Welcome back as well, Keisha.
Thanks for having me.
Glad to be here as well.
Awesome stuff. Yes. All right. So let's start with this issue of inflation. I do want to come to your topic very, very soon, Keisha, because that's an interesting one. But let's start with you, Peter. So you want to tell us about inflation and your investment portfolio. So first of all, predictions for inflation.
All right, thanks about it. All right, so let us start by talking about um, let's put it on the table. Inflation is a destroyer of wealth, right? Over time, inflation slowly but surely erodes the purchasing power. So all portfolio strategies must be designed to outperform inflation at a minimum. Now, you have different types of portfolios. Strategies and portfolios in general. The cash element of your portfolio is for those emergency needs and short-term needs. But your more medium to long-term type portfolios, whether that's for sending your kids to college or retirement, inflation effectively erodes it. Now, what is our prediction for inflation? So we have guys in our research department crunching the number day in, day out. And what it comes down to, it's not what inflation has been, but what inflation will be, right? So it's basically the expectation. So we saw inflation spike up to 6.1% over the last 12 months. But what is more interesting is what is our expectation going forward? We believe in the Bank of Jamaica's fiscal targeting program. And the Bank of Jamaica is targeting inflation to be between 4 and 6%. So anywhere in between, cut it right down the middle, 5%. So baked into the long-term expectations of 5% inflation. And as such, so how do you create a portfolio that at a minimum, not a target, but at a minimum is able to outperform inflation in the medium and long term? So there are going to be periods in which when you look at your portfolio, the performance is below the 12-month inflation, but you're not looking at it as a snapshot. You're looking at it over the life of the portfolio. And as such, how do I combine different asset classes? I heard you talking about real estate. So how do you combine real estate, cash, bonds, equities in a nice bundle to match the specific needs of the investor? And that is what we do in my unit, putting together different ingredients to outperform inflation at a minimum. So we're looking at inflation and the core of it. I must confess that when we look at what is causing inflation, and therefore setting our expectation, we do believe that there will be some amelioration in the headline rate of inflation, because a big part of the jump in inflation is due to food prices, right? So food prices, for those of us who head down to Coronation Market, you'll notice that prices go up. So once those prices go up, now if for inflation to continue to be high, those food prices will have to continue increasing. So the farmers, okay, will they be seeing a 1.8% jump in the price that they're able to get for pumpkin and banana? They would like that. But as more pumpkin and banana is planted, the overall supply of pumpkin and banana will go up and the prices will come down. And let us not forget that there has been shocks. There's flooding, which decimated a lot of crops. So we are looking to say, beyond this quarter, how does inflation number look? And we don't see a scenario in which inflation is going to run away, that is going to cause us to start dumping Jamaican type assets. So we are in it, and we're looking at real estate, and we are long-term buyers of the stock market, good quality stocks, because we believe that will a combination of stock, bonds, and real estate or alternative assets will allow us to outperform inflation.
So, all right. So you mentioned those combinations: real estate,
Correct.
stocks, bonds, alternative assets. But what ratios should we be looking at based on the current environment? Like, where should we put most of the weight in our investment portfolios right now?
So excellent question, right? So there's no one size fit all, right? So there are different risk tolerance and time horizon associated with what you should be having in your portfolio. So a 25-year-old or a 20-year-old, David, you should be buying stocks every day. You should be ramping up on all the stocks that you can hold in your portfolio, because even though over the last 6 to 8 months we've seen a wobbly market, over time in an economy, once you buy a diversified portfolio of stocks, you will do well over the long run. So a young guy like David, his portfolio is to be weighted towards the more risky, fast-growing type asset classes. When I say risky, I should really say volatile asset classes, which include equities. The real estate component of your portfolio is an excellent way to track inflation and have some stability to it. So Keisha, younger than a little bit older than David, right? But younger than me, right? So her allocation to real estate, she may be looking at real estate in a more wholesome way relative to stocks. So David would have more equities. Keisha would probably still have a nice bunch of equities because she's still quite young and sprightly. So she will have equities in her portfolio, but real estate now to add some buffer and stability to her portfolio. Now, as you get down to my age now we're looking at, okay, we reduce our equity
What's that, senior citizen?
Senior citizen age. Right about to collect check, right? The pension check. So we're looking to say, so it
Oh, what happened to Peter internet, man? Peter is still there?
Yeah,
Right,
I'm still
Peter
there.
there he is. There he is. All right.
Sorry about that.
Continue at the point.
So the stability, real estate is there to provide stability in the portfolio, but also it's a nice hedge against inflation. Now, let us not use the pandemic years as a measure to say our inflation. This is a once in a 100-year type cycle, right? Over time, what really should happen is that rental increases and property prices will track inflation, and as such, it's a nice hedge against inflation movement. So a diversified portfolio of real
Right, because
estate.
landlords tend to raise their rents pretty much every year, huh? In line with inflation.
In line with inflation. So they're measuring to see how they can get the best out of the asset. So we like real estate. I must confess, I'm more biased towards commercial for long-term investments rather than residential.
Interesting.
But
that's an interesting conversation we just had about commercial real estate.
No, but here's the thing. So I am not looking at the no, right? So there's this concept in investment where people look at no and extrapolate out and say, okay, it will always be like this. So last year during the height of the pandemic, people are saying, okay, we're all gonna die. So at that time, that's when you should be looking to say, okay, it will be better. If you extrapolate and say, what would the world look like if every day there was no vaccine and there's no hope in sight? Then you should stop and go into the hills and relax. But once you see you look forward, always looking forward. So okay, what does the world look like? So I'm not looking at 1 year, 2 years from now when we're investing. We're looking 5, 10 years from now. What will the world look like? Where are the opportunities now? So when I take the action now, 3, 4, 5 years from now, we're laughing all the way to the bank. So I like commercial real estate, and when I should have point out that commercial real estate, I see warehousing, all of that as commercial. Basically, once
so the industrial subsector.
The industrial subsector is all there. So the BPO space, the warehousing space, that's all a part of commercial. And as such, we see it as a long-term. Now, plugging all real estate fund managers, this is where, rather than a retail investors saying, okay, how do I get in real estate and use their money? Because a real estate investment requires a large dollar value, capital outlay. What that means is that the ordinary guy trying to invest in real estate will be concentrated in one property. Why do it that way when you can buy a fund, an asset class, a KP REIT, JMB real estate fund, other funds, right? Why do that? So once you invest in those funds, you get a diversified pool or exposure to many assets that that the fund manager has. So you're not concentrated in this one building. So Corona, tenants ask for waivers, all your eggs are in that basket. So a diversified pool always wins. So in just wrapping it up, to track inflation, all portfolios should be at a minimum be trying to outperform inflation, because inflation destroys wealth. How you actually do that is that finding the right allocation that fits your specific need. Don't look over the fence and say, okay, that guy has a lot of equity, because it is specific to him. The risk tolerance and time
Exactly.
horizon is specific to him.
Exactly.
And as such, it is designed for him. So once you,
That's why whenever people ask me, what they should invest in, I'm like, I can't give you that kind of
Exactly.
advice. It all depends on your risk profile, on your goals, on your timelines. Exactly.
So it's all about that.
So we've been talking a lot about inflation, and Keisha, I want to bring you in here because the iPhone 13 is out, and Apple has decided to keep the price the same as the iPhone 12. Why?
So this is basically Apple coming out saying we are inflation proof. They've kept the price of the iPhone 13 at the same price of the iPhone 12, mainly to signal to persons that though you are worried about inflation basically everywhere else in the world, and especially with food prices, as Peter mentioned, we, Apple, want to show you that there are some pockets in the market that are inflation proof. That has met with some contention because people are saying, I can't eat an iPad. I can buy the phone and enjoy the product, but I cannot.
No, but I've seen a video today. I've seen some memes about Apple, about the iPhone 13. Like I saw one of the software designers, there's somebody pretending to be an Apple software designer, and they had the iPhone. They're looking at the iPhone 12 design and contemplating the iPhone 13 design, and they moved one thing. They moved the camera from here to there. And they were like,
yes,
iPhone 13. So, but I hear that the technology has significantly increased. Maybe the design hasn't, but inside the phone is different. So people are complaining about this, Keisha?
Yeah, they're complaining that there's not much difference between both models, and the fact that the price has been held constant isn't much of a buying factor to them because everyone is still struggling and grappling with increased food prices, increased shipping costs. So yes, Apple has done a good thing by maintaining the price of their iPhones, but it hasn't been met well with the market because at the end of the day, you can't eat an iPad. It is a discretionary item when it all boils down to it.
But what are our sales looking like, though? Is it something that has impacted sales at all? Are people still buying iPhones as much as they have in the past?
No, the pickup this time around has not been that good. Likely also because there's a lot happening now on the economic front. Peter spoke to a lot of it already in terms of the concerns happening. And then the iPhone release coincided with the pullback in stimulus from the US Fed Reserve. So people have less money available to them. Add on top of that, the fact that the stock market has been in a downward trend. People just aren't focused on going to buy the latest iPhone right now when there hasn't been that much improvement in the overall technology.
And then that stimulus in the first place is one of the factors that was or has been blamed for inflation, isn't it?
Yes, because what happened with the stimulus, the intention was for persons to kind of buffer their day-to-day expenses, but persons took that to the stock market to invest, and that pushed the market up a lot. And now with the pullback in stimulus, persons have been cashing in on their gains and coming out of the market, which has propelled some of the selling as well.
Interesting. Yeah. So the tech sector always one to watch in times like these. So is it just Apple alone, or have you seen other companies in tech or in general taking those cues?
In terms of the price movement?
Right.
It's been what you call a
or
puke
lack thereof.
fest. It's been a puke fest in the markets the past couple of days because literally all sectors are down. There's been a lot of panic. There's news coming out of China in terms of constraints with a real estate company there having liquidity issues. The markets have been struggling the past couple of days, but September has historically been a month in the markets where we do see a pullback in stock prices. So it's one to watch. It does present also now buying opportunities for some of these stocks that we've been eyeing for some time.
Well, we always watch the U.S. market for sure, and for Q could happen here, and also for those of us who have investments in the U.S. markets. Let's look back on the local scene. David, you have some news for us about Productive Business Solutions. They've acquired a sister company. Tell me about that.
So Productive Business Solutions has entered an agreement to acquire PBS Technology Group. So for context, the PBS Technology Group basically acquired the assets of Massey Technologies, which is the company known as parent company. Its parent company known is Massey Holdings. So what they did was that they said, all right, we're going to acquire you, and we're going to do it in a mix of equity and cash. So PBS provided $5.3 million worth of cash and issued about 64 million shares to the 4 owners. So as a result, the entire deal is worth about $53.9 million US dollars, or basically 8.09 billion GMD. So this deal itself is going to end up pushing them or their earnings forward. So even actually the JSC's issued share count a while ago, I realized that it shares from the transaction have already been accounted for on their side already. So it probably means that the deal has been already consummated. So, it probably means when we see the results come out in November, we'll see this acquisition being reflected. And the thing is, it's good for PBS because they kind of not having their best time, to be honest, in context. So in reality, revenue was down like 10% in 2020, really because, their paper, supplies and parts that, recurring revenue stream usually have was down 20% because nobody was printing, nobody was really in the office and so on. And relation to printing equipment and so on, like those segments drew down. The information technology and communications segment, really basically improved 25%, which is expected in this environment. So, PBS works with Cisco, Xerox, Oracle, these companies that distribute software, hardware across Jamaica. So like if you're working at office, you probably see a Xerox printer and so on. And like even First Caribbean International Bank, they had a ATM card, it said PBS on the back of it. So this is actually going to be pretty good for a PBS. I'm picking to the original company that's standing in the JSC, Productive Business Solutions, that's going to actually push them forward in terms of earnings. So at the end of 2019, based on Massey Holdings accounts, that segment provided 84.4 million TTD in profit after tax, or profit before tax, I should say, which is basically 12 million US dollars. That's far higher than their own earnings, basically. So for context, although this company earns $160 million in revenue, US dollars I'm speaking, they had a net profit attributable to shareholders of just 105,000 US dollars.
Whoa.
So you're talking about you earn $160 million, but you're only taking in $105 million. So, but acquisition
105,000. Yeah,
US
so
dollars.
they're spending quite significantly. Well, tell me something, David, because when I first heard this story, I was a bit confused. So PBS is acquiring PBS Technology, and they're sister companies, but so they're completely separate companies. How does it go?
All right, so
because I was like, how are they acquiring a company with their same name? Like, what? How does this work?
All right, so let's break it into context. So PBS Technology Group and Productive Business Solutions are both affiliated with the Mustang Group. So that means, Paul Scott, Melanie Soberati, Nicholas Scott, and so on. So PBS, once they list on the JSC, they are relatively constrained in what they can and cannot do. So if they were to have tried to come to Massey directly and say, hey, we want to acquire Massey Technologies, it probably wouldn't have gone as smoothly because Massey has been scaling down and consolidating their portfolio. So for them, they wouldn't want to take shares in Productive Business Solutions released on the JSC as part of the transaction, you understand? So Predator Media Solutions, the Portland Funds based in Barbados as well. So the Mustang Group and the Portland Funds came together, created PBS Technology Group, purchased the assets from the Master Group, and they know PBS, utilizing the JSC, can now buy the PBS Technology Group with a mixture of shares and cash. So this is unfamiliar to us. So if you know Separate, Richard Pandohi, last year they disposed of property they held to the Epicarian Property Fund, the Valley Fund specifically, for a share transaction. So Separate the property, instead of giving cash for the property, Epicarian Property Fund said, hey, we're going to give you some shares relative to the value of the property.
Right,
And
I remember
when
that.
Separate got those shares, they then give those shares to shareholders who had more than 20,000 shares in Separate. So basically, the persons who actually, are the main principals on these companies basically benefited from actually getting assets moved from point A to point B, get a little equity on top of that, and still, maintain a level of ownership. But at the same time, the one caveat in this case is, or PBS, is that it won't necessarily benefit retail shareholders per se, because Media Solutions Limited, which is in the JSE, it's in 2017, it rarely trades. So to put it into context, in 2019, it traded for 16 days out of the entire trading year. We've gone 38 weeks into 2021. PBS has traded only 18 days out of a possible 183 days in the entire trading
It's not
period.
a very liquid stock.
No, because here's the joke. It's the most tightly held stock on the JSE. So it's the top 10 alone on 98.33%. And when you add on the senior managers, it comes up to 99.24%. And even this recent transaction, those shares are being issued.
So among those top 10, some of it is publicly held though, because don't you have to sell at least 20% to be listed?
Okay, so context again. So you don't necessarily have to sit. So you can issue shares, or the owner can sell shares. So the Facer Group was the original 100% owner. They gave some shares to the IFC Group, and then they sold some shares to the market. They own 68% pre this current transaction. So they own 68%, but based on the take up in that original offer, there wasn't much, smaller interest. So as a result, you had this very large concentration at the top. So let's say they are 99.24% held by the top 10 plus the directors and senior managers. So you have that 0.70% being floated out in the market. And as a result, you have that much interest, which is interesting because it creates an illiquidity premium in one sense. Let me explain that. So my illiquidity premium, you're talking about a company, you probably want to acquire, even though it's listed, but the shares are frequently traded. So when the shares do actually come on the market, you're going to buy it any chance you get. So like, it's like a cat seeing a mouse and saying, I'm not taking it away, I'm going to grab you right now and eat you. Like, that's just kind of the situation. So for context, you have ISP Financial Services, similar company in terms of low liquidity, tightly held, like 99% owned by the top 10 and senior managers. Their share price fluctuates between like probably 20% and almost any given trading at the time it actually trades. So like probably say 500 shares traded, but the price went up or down by 20%, just because of how very small the float is. And the thing is, somebody wants to buy those shares, but as I said, there's not much buying pressure on one side, but there's very few sellers. As a result, persons who really want the company are going to pay the premium to get it, just because it's liquidity itself creates a premium for the person who already holds that stock. In this case, PBS. So PBS is trading at $77 cents US. So although people might say, oh, stock price should go up now, hold up. Remember, as I said, it's only traded 18 days in this entire year. And the sad thing about it is, even with this transaction, some persons are going to even consider selling, because I would say that company is going to have a bigger footprint, because by acquiring PBS Technology Group, the PBS will actually get a footprint in Antigua and Barbuda, Trinidad and Guyana. So they're going to get a bigger footprint, and they'll also get, a bigger company to actually move cash around and so on. Because let's say, look at it.
Right.
This company had $160 million US worth of revenue, 105,000 US dollars worth of net profit attributable to shareholders. But with the massive group's information technology and communications business unit, it brought in 580 million TTD in revenue, but in turn brought in $84 million in actual before tax. So you're talking about a very, very different, business that's going to be transformed. So because of the acquisition they're doing right now, then they probably might even retire their preference shares, which are already existing right now. But at the same time, it's not going to be that lucrative for the regular retail man. Because I said nobody's really selling, and if they do get the share,
Right.
why would they sell if there's such a premium for it?
Exactly, and because it's so tightly held, it's hard to get. So when you get it, people tend to hold on to it.
99.24%.
Thank you so much for your input, David, Peter, Keisha. Really happy to have you as always. Don't go anywhere, everybody. I'm gonna take some of your comments in just a moment. I like some of the comments that are coming in the chat. So keep those comments coming. We'll soon wrap, but I want to chat to you guys, the viewers, in just a little bit.
Hi.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers.
All right, so here we go. Talking about Apple, I see a lot of comments here about Apple. Ricardo Allison says Apple has the art of upselling lock, and that's because you guys were taking note of. You said Apple doesn't. Where is it? The fact that Apple kept the price for the iPhone 13 the same doesn't really prove a lot because they're raising prices drastically in their other products. For example, the AirPods. How much the AirPods cost now? My daughter is obsessed with Apple products. Like everything for her has to be Apple. They have that whole ecosystem thing locked. But somebody was saying in the chat that it doesn't have, here it is, that the iPhone 13 doesn't include charger and earphone. What? They're not giving you a charger with your iPhone now? Like I thought that was standard for everything. Okay. So they say that they're keeping the price the same, but now your phone doesn't come with a charger. So you have to buy a new charger if you don't have one for the 12, or if they even changed it, because they change the charging ports all the time. So I don't know if they change it this time, but and Apple chargers are crap to begin with. Don't you find iPhone chargers just tend to fray very easily? What's up with that? Joe Black asked, so my Apple friends, you can comment in the chat. Joe Black asked, did you adjust for Apple's stock split? Jay Ham was asking, so the iPhone 13 doesn't come with a charger? Interesting. Samsung would never. I'm a Samsung girl myself. Another comment that I wanted to take earlier. Here's a good one from Blue Collar Finance. Of course, this is not intended as investment advice. You need to consult your own financial advisor. But Blue Collar Finance says the standard way to measure the amount an investor should invest in stocks is 100 minus your age. So a 20-year-old should invest about 80% of portfolio in stock. Okay, interesting. All right, so I've heard that one. Let me see. Oh, this is the one I wanted to take to. Jaleel says, are we going to talk about our beloved KFC not being on the Jamaica stock market? I think KFC is Restaurants of Jamaica. I think that's part of that franchise. It's a privately held company. Who knows? Based on everything that's been happening in the past 5 years, 10 years or so, who knows if they eventually decide to go public. But they're making a lot of money as is. Here we go. AirPods are selling for $249 US. That's for the AirPods. Cecilia says it's $199. So which one is it? How much for the AirPods? Well, AirPods are a premium product though. So I think even with the Samsung, like the Note, I have the Note. The new one is the Samsung S22. They don't make the Note anymore. These that I have in, these are the Galaxy Buds. It doesn't come with this. It comes with a regular plug-in earphones. So that's what it would come with. But if you want the premium Bluetooth wireless product, then you're going to pay for it. So I wouldn't expect the iPhone to come with the AirPods. The previous versions come with the AirPods. I don't know how that works. Let's see. Malik says that you have to have the iPhone 11 chargers. So the iPhone from 11 Plus works with the 13 because, you know, they change them all the time. Cecilia says for the iPhone 12, they just give you the USB, not the power brick. Oh, but that's what they've been doing, though. Samsung does the same. They give you just the cable that you can plug in, but they don't give you that you can connect to your phone, but they don't give you the part that plugs into the wall. That seems to be the trend now. Ingrid says that's, I don't know why that change has been made. So I guess if you have the cable and you had a previous phone, then the cable, because it's a standard USB type connection that can connect to your laptop, then you can just plug it into the previous brick. But what tends to change is the connection part to the phone. So for some reason, that's where the trend seems to be going. But I want to thank you, everybody, for joining me on this edition of Taking Stock Live. Great having you. Make sure to check out the other programs. Money Mondays JA is up. We're talking about Ponzi schemes this week, how to spot one. Make sure that you're not duped. You're not the victim of a pyramid scheme or a Ponzi scheme. What are the red flags that you should look out for? Tomorrow evening, it is Money Moves JA, and Ryan Reed from First Rock is going to be my guest on that episode. We're talking about incorporating a business outside Jamaica. As you know, First Rock is a company that's done that. They are incorporated in St. Lucia. So if you've ever thought about incorporating or registering your business in St. Lucia, Barbados, or one of these other tax efficient areas, then that's an episode that you want to watch because he's going to tell you how to do it. Blue Collar Finance says Apple has been changing strategy based on revenue result. It's increasingly becoming a service company more so than a product company. We see where that has been happening in several things. Ricardo, see, I told you. Ricardo said Apple chargers are the worst. Every few months you have to buy one. I have noticed that, and that's one of the reasons I do not like Apple. Christopher says, get this engagement up. Yes, 116 watching, but only 29 likes. Come on, everybody. You can do better. Like the video. Give me a like. Give me a thumbs up so that YouTube recommends the video to more people, and make sure that once you leave, you share this with a friend, send it to them on WhatsApp, send their email, send it wherever you want. And remember, of course, to subscribe to the newsletter at KalilahReynolds.com/newsletter. As always, I appreciate you watching. Thank you so much for tuning in, for joining me this evening. Thank you to our sponsors. Of course, big up our new sponsor, Appleton, and big up our day ones, Bulwark Insurance, JMMB, Proven, Ideal Portfolio Services, Sagicor Investments. Hope I didn't miss anybody, but big up to all our day one sponsors. Big up to our viewers, day one supporters. Love you all. Until next week. See you later. And of course, let's get this money.